Thank you for joining us today for the Mining Strategies panel. I'm going to have you guys introduce yourself, starting with Alex.
Hey, I'm Alex Leishman, CEO and co-founder of River Financial, where we help people buy and mine Bitcoin.
I'm Frank Holmes, Executive Chair, co-founder of Hive Blockchain Technology. I'm based in San Antonio, Texas.
I'm JP Barrick, CEO and founder of Mining Store. We help retail miners get into the mining space.
And I'm Ryan Leachman, co-founder of J Energy. We're a Bitcoin mining company based out of Wyoming.
Todd Garland, founder, CEO of Great American Mining, and we mine Bitcoin on oil fields.
So the first question we're going to talk about today is the China mining ban and how it's affecting hosting capacity and mining capacity in the US. Alex, do you want to start because you guys have hosting relationships?
Sure, yeah, I can give a shot at this. So last summer, obviously there was a big shift in the hosting capacity in the United States. Chinese miners started flooding into the US, lots of constraints on capacity. We've been seeing this a lot. One of the effects that we've seen is it's really pushed sort of like the cash demands for setting up or for locking in hosting capacity, really requiring, colo providers are requiring a lot more upfront cash these days. So it's been driving, it's been sort of favoring people who can get liquidity, get the cash, really smart with financing, and we've seen more sophisticated players come up because of this.
So for us, we're just coming into Texas now, and there's no doubt what China did was epic for the global scene, and really I think is so key for making it more decentralized rather than concentrated with a handful of miners, mega miners in China. But for ourselves, it allowed us, we started expanding in Canada. We purchased GPU-1. We built that data center. We own the land. It's now pushing over 50 megawatts. It'll go to 70. It's all green energy that helps in addition to our Quebec asset, La Chute. So during COVID, we made two significant acquisitions in Canada for mining Bitcoin because the company was really started mining Ethereum in Iceland and Sweden. So all this, and I think for Texas, living in Texas, it's a phenomenal opportunity. It's just going, I believe, continue to grow, and that's why we made a commitment to do a deal with Intel. And it's the first sort of big transaction, bringing Intel into the US, and Hive is coming to America. We're coming to the great nation of Texas.
Let's go, Texas.
Well, for us personally at J Energy, we don't do any hosting, but we gladly welcome the reduced difficulty, lower network hash rate, and take advantage of the hash price and the profitability as a miner for sure.
How is the supply chain affecting you guys being able to source generators, switchgear, and other long lead time components if you guys don't do hosting?
Yeah, I mean, right now generators are pretty hard to come by with the price of oil going up. Oil fields getting a lot more active as well. So it is hard to source generators right now, broadly speaking. And then like in terms of the Chinese folks coming over here and looking to reallocate their hash rate to the United States, I think at that time last summer, and it was nice to enjoy the lower difficulty while it lasted. Oil fields weren't really ready for that quite yet. I mean, they're trying to relocate like gigawatts of hash rate, and there's probably maybe like 250 megawatts of total hash rate on oil fields right now. So like it was still a little too early for the oil fields to absorb a good portion of that.
So the next question I want to talk about is cold versus warm mining climates. As you guys are moving to Texas, you guys mine where?
North Dakota.
North Dakota?
Wyoming.
Wyoming. So how is the cold climate affecting your mining operations? What are the benefits there versus building out an operation in Texas or in a warmer climate?
Yeah, I mean, I think it's two sides of the same coin, or roughly. We've seen temperatures as low as like -40, and trying to deal with that is a lot different than dealing with like West Texas heat. I mean, when it feels like -20, like trying to bend cable. We've got some guys here in the audience from our team. I'm sure they can tell you a little bit more, but it's not fun. Last trip I was up there, I was trying to like get this piece of Velcro on insulation on a pipe over. It feels like -20, and I just gave up. So.
Yeah, and from our perspective, obviously cold weather climate. We're oil and gas guys originally. I'm a petroleum engineer by background, been in operations my whole career. And so working in cold environments for oil and gas operations is something that we're somewhat used to doing. But As far as Bitcoin mining goes, the biggest thing, obviously, we use natural gas similar to Great American Mining. It's not so much you're worried about your ASICs. You know, the ASICs are getting great runtime in the cold weather, and they're performing very efficient. It's keeping your natural gas flowing, keeping your generators online, and so it's definitely, you know, taking lessons learned from oil and gas operations days, making sure that you can keep your equipment online. And so we definitely welcome the cold. We prefer it over the heat, absolutely.
So it's been nice and simple for us being 100 miles from the Arctic Circle. We know about that cold weather. And the nice thing about Sweden is it never really gets hot. So in Quebec, we can get a couple of very hot weeks. The same thing in New Brunswick. But otherwise, functioning in cold weather is a different paradigm, both ASICs or GPU chips, it doesn't matter. But coming into Texas, we know that other people have come in and they're building out and they're doing liquid coolant. We were at the conference last week in Houston, and I was so surprised there was 5 executives from Exxon, PhDs, computer science, all coming in about Exxon and their liquid coolant and how they can basically help this industry. So we think by the time we build out this time next year, which will put on about an extra 3.6 exahash, in Bitcoin mining, that will perfect whatever that technology is. But most important for us has been Intel. Bringing Intel into this space, we have to maintain a green footprint. So that's a key part of their decision in coming up with these super new machines.
So when it comes to maintaining a green footprint, the REC credits, do you guys get REC credits for the mining energy you're using, and do you guys retire that at Hive?
Do we get the what credits?
REC credits, renewable energy credits.
We're not getting renewable credits from Sweden or Canada as of yet.
Awesome. One of the questions I have for the natural gas guys is how has natural gas prices affected your operations with the dramatic increase? And it's definitely affected the grid pricing across the Midwest.
Yeah, I mean, right now we have all fixed contracts.
Okay.
So we're not buying off a pipeline. We're straight at the well site. There's really no other use for that gas. They're literally just flaring it. So it's kind of whatever price we're willing to pay. And there's a lot of gas to go around, so.
Yeah, and similar to echo that, but one of the things that I think it does help is, you know, a lot of people were, at first as natural gas prices going up, were, you know, talking about the negative aspects of it, but I kind of look at it as it's now allowing oil and gas companies to have additional revenue within their portfolios, and so ones that were potentially afraid to get into Bitcoin mining or having a hard time finding capital to want to go towards it, I actually think it's going to be good for the oil and gas industry to continue to adopt Bitcoin mining and start bringing it in as they're having additional revenue coming in. So we're welcoming it.
What I'll say is in the SPP market, which is in the Midwest, we're seeing the natural gas prices increasing are affecting our utilities like OG&E too, because their fuel cost was over $170 million more than what it was last year. So raising those prices by almost $0.015. They used to have a great rate at 3 cents. Now it's 5 cents. So we're seeing the Midwest and people that didn't hedge, and most utilities don't hedge their natural gas exposure, is making it very, very hard to get gas or to get energy prices under 4 cents. So expect hosting rates and capacity constraints to continue throughout this bull market.
So one of the parts of mining in Sweden is a very developed hedging market. So last year we locked in for this year 3 cents. The year before it was 2 cents electricity, and it's a touchdown pass away the hydro dam. Literally to get that beautiful green energy coming into the facility. And now our vision is to build out greenhouses to take that hot air and become the cucumber king of northern Sweden.
Cucumber king, I love it. How did you become the Intel mining king? Like, what was the process of bringing Intel into the mining space?
They reached out to our President Chief Operating Officer because of our green footprint and ESG strategy. And they wanted to make sure that there was less blowback and negative feedback coming to Intel, coming into this space. Aiden and Gabe, our counsel, I believe they're in the room here, they did a phenomenal job of negotiating and also with the OEM so that we should start getting machines in May. And so we're very thrilled about this whole journey. It's less expensive, much less expensive. It functions like an S19 Pro, and the whole payment structure is much easier if you're a crypto miner. And we found that's the same thing in the GPU chips. We don't have to give someone 50% of our money and wait, and maybe there's delays in getting the equipment, et cetera. it comes in a very fluid mechanism for us, so we can manage our cash flow. I believe that this industry has to function like frackers. You always have to be drilling.
Yep.
To maintain, you take 20% of that cash flow and always upgrading your systems. Otherwise, you'll have 1,000 barrels, and then a year later, it's 50, that decline rate. We have the inverse of that is the hash rate difficulty rising. So we always have to be upgrading and having that sort of discipline. When the mechanism is that you basically, the machine's ready and you can pay for them, that you don't have to do all these lump sums and then speculate when the machines are going to come, really helps you function like a great Texas fracker.
I love it. Love the analogy. Alex, this is over to you on the software side. With what River Financial is building, trying to bring Bitcoin mining to consumers, can you talk more about how that journey has been and kind of any challenges you've run into, either on the co-location side or on the software side?
Yeah, for sure. So for those of you who aren't familiar with River, we have this all-in-one solution. We started as a Bitcoin brokerage to make it easy to buy, sell, and secure your Bitcoin. We decided that Bitcoin mining would be a very compelling product offer to our customers and have Bitcoin mining natively sitting in this app, this financial institution. And so the way our product works is you buy physical miners directly from us. We manage the hosting for you, and we manage all of the end-to-end supply chain and all the repairs and complexities. As that miner is mining, we put the Bitcoin directly into your River account. We abstract away the concept of a mining pool and all this stuff. Now, the big challenge has been scaling up Bitcoin mining is a lot different than scaling up Bitcoin brokerage. There's all these real-world implications, as you guys are intimately aware. There's supply chain risks. There's what kind of uptime guarantees can we promise to our clients? Who do we choose to partner with for colo facilities? There's all these implications when it comes to promising uptime, timelines, energy sources, prices, and it's a really it's been a whole nother ballgame for us, so we've had to learn very fast, but things are going very well. The space is maturing very quickly, and there's more increasingly more sophisticated players like you guys, which makes our lives a lot easier. And very bullish on retail mining in general. What you guys are doing at mining stores is also amazing, and I think retail mining is going to be an incredible industry in the United States.
Definitely agree with you on that. With Mining Store, when the retail mining channels were putting together, we were able to drop the cost of getting into mining to $100 through the Reg CF framework and working with influencers to start their own Bitcoin mines. The next question I want to talk about is strategies you guys have for reducing costs and scaling your operations in the next 2 to 5 years. At Mining Store, we're working on looking at stranded wind assets and mining behind the meter in regulated markets such as SPP, where you can get energy half the time from the wind and half the time from the grid.
Yes, I'll speak to kind of what our thoughts are. So at J Energy, we're, like I said, we're oil and gas guys, and we're really trying to educate the oil and gas space on the potential asymmetrical risk that Bitcoin mining can bring to their portfolio. So when you think about it, if you're just purely a Bitcoin mining only company, you're beholden to an energy producer, whether that's oil and gas, whether it's utilities, you name it, you're a purchaser of energy. We're of the opinion at some point in the future, there most likely won't be Bitcoin mining only companies, because the energy producers at some point are going to realize that they can bring that into their house, utilize their own energy. And when you think about it, when I say an asymmetrical risk, it's that they already have a sustainable business model. So think of an oil and gas company. They sell their oil, they sell their natural gas. Well, now if they bring Bitcoin mining in-house, they don't need to sell any of their Bitcoin if they build it to a scale that basically their portfolio can withstand. So they're selling their natural gas, they're selling their oil. Well, now they can cover their expenses of their Bitcoin mine. And now when you compare them to a Bitcoin mining only company, their actual power price isn't necessarily as important as a pure Bitcoin mining only company, because they can basically subsidize their Bitcoin mining costs and expenses with the rest of their portfolio. And so we're really trying to educate the oil and gas industry that this is what they should be thinking of, is that you shouldn't just be an oil company, you should be an oil, a gas, and a Bitcoin company. And once oil and gas companies, energy companies, utility groups really start realizing this, that they're ultimately going to be the most competitive when it comes to Bitcoin mining, can withstand downturns if difficulty gets too high, hash price index gets too low. I think that's going to be the big shift in the industry at some point in the future.
Yeah, I honestly don't think it's too far away. I think we're like in the beginning of like a pretty good cycle for Bitcoin in general. In the next cycle, we'll see a lot of those power producers start doing this in-house or hiring companies like us to do it for them. And I think it just all comes down to vertical integration, which is what Ryan was talking about.
The one thing we've seen is that power producers, when they come to the table with their energy asset, they usually want some upside. And it's like, well, now my energy cost isn't 3 cents, it's 6 cents, 7 cents if we're splitting the profits and you're not putting up the capital. So there's definitely going to be an education of getting the energy producers to understand that their asset is a commodity and that the Bitcoin miners with the chips and having access to those are the most important piece of the business. That's what generates the Bitcoin. Without that, you don't have anything. Does anyone have any other comments they want to make?
Our strategy is always been mining with Ethereum and hodling Ethereum and trading Ethereum. So last year we hodled Ethereum and it was up 300% and Bitcoin was up 80%. So we made much more, but I know the Bitcoin maximalists can't stand this thing because it's going to go proof of stake, and I just don't think that's just proof of BS. I just don't think it's going to happen for a host of reasons, and that's not what's relevant. What's relevant is that we mine for 75 cents a kilowatt. That's our revenue.
It's revenue.
And our cost all in is a nickel. So that is called a 90% margin. And that is a very beautiful, enriching margin that allows us, even though it's more volatile, to turn around and build out our Bitcoin presence and our footprint. So we will continue to mine Ethereum. We have another vision that we're building out for high performance computing, which is even more profitable as the digital world expands and the need for independent data centers. But really it's important for us is that mining Ethereum, we can sell, we take the profits, all of a sudden we fund Intel. And then Ethereum will correct, we'll remine it, we'll build it up, it'll have a big pop. It's always 2-to-1 volatility to Bitcoin. It's like silver is to gold, so we'll trade it. But Bitcoin, we hodl. We put it away. I'm a big believer in those virgin coins. I'm a big believer they're going to be like Andy Warhol original prints. And they're going to have always the fungibility, but if you have the original Babe Ruth baseball card, it's worth a lot more. So that is my long-term vision of having a big bank of Bitcoins.
Well, thanks for sharing the portfolio management strategy of Hive. How does River Financial manage their portfolio, either for their clients or for yourself, when it comes to mining?
Yeah, so we're quite different than most of the other companies in that we sell our mining hardware direct to our clients. Our clients, at the end of the day, are the owners of the machines. We don't keep a whole lot of equipment on our balance sheet directly. Most of the items on our balance sheet are actually sort of long-term procurement of co-location facility. So we're helping effectively finance new co-location facility constructions so that we know we have capacity to host our clients' miners. That said, we do maintain some miners on our balance sheet. Most of that is for providing sort of the best experience we can to our own customers. Let's say sort of there's a miner shipment delayed, we can sort of hand existing miners that we're running on our balance sheet off to our clients to offset things and provide a better experience. So most of our complexity comes around long-term procurement of colo facility space and planning that out and sort of making sure our cash flows are all where they need to be to do that properly. And then we are procuring the actual miners and the hardware sort of on shorter term intervals to fulfill the demand from our customers. So we're sort of matching customer or sort of retail cash to build out mining capacity, whereas a lot of people in this panel are sort of getting institutional cash to do that.
Yeah, I mean, unfortunately right now, we've been selling a good portion of our Bitcoin just to fund operations. And we've had a short-term view that hash rate plugged in is worth a lot more than Bitcoin on the balance sheet. We obviously aspire to get to the point where we don't have to sell any, but we've so far still been bootstrapped to the point where we're at right now. So that's why we're doing it.
Yeah, and similar echoes here. You know, we try to hold everything that we can. If we can hold, you know, basically whatever we can we'll hold, but similar to Todd is that you know, even with our generation assets, we don't we rent them because we'd prefer to put all money towards ASICs basically, because you know, an ASIC makes you money, a generator just, you know, allows you to spend
just
money.
gives you problems.
Yeah.
So now the next topic I want to talk about is containers versus data center or building infrastructure when it comes to mining cryptocurrencies. The scale, the speed, the reliability, the mobility of those. We'll start with you because of the new Texas facility that you guys are looking to build in the warm weather. How have you approached that conversation?
Well, that'll be with containers.
Containers.
In partnership with Dave Perrell. In building out in West Texas. I believe we're looking at Lubbock in that region. But for us, it's been basically building data centers, which we have throughout Canada, Iceland, and in Sweden.
And what have you guys seen in running operations in data centers? What are the advantages compared to containers? Have you done that analysis?
I think you just have more control, and for what I can see, for us is to be able to have more control. Everyone, especially when it's cold weather, you have one-in-one facility. No one wants to walk outside when it's 40 below, and so all your machines are basically protected. So I think from that end, we prefer that. Now, we have some people that have containers near us, but we're much more, I think, productive, and we have the highest efficiency ratios of all the other crypto mining companies that are public, and I think it's because of that sort of discipline and strategy we have.
I would say the same thing for us is that when we build data centers and we build the actual buildings, the amount of technician space that's available and the quality of life for the technician working on these mining facilities, usually 24/7 depending on the scale, is improved by that infrastructure and the ability to work in a warm environment, which you take for granted being a trader or being someone who's managing a mining company and not actually in the facilities every day. For you guys, how are you approaching container versus building infrastructure?
Yeah, so we build all of our containers in-house in Casper, Wyoming. We take the container approach, obviously, over the data center approach because we're also chasing, natural gas. And if you think about the oil and gas industry, is that the majority, predominantly of all natural gas, especially if we're setting it up on certain clients' locations or if it's chasing flared gas, is that that natural gas is on newly drilled wells, and typically the reason that gas is being flared or lit on fire is what you've seen. The reason that oil companies are doing that is that typically their midstream infrastructure or their facilities haven't been set up yet. They just went out and drilled the well, they completed it, brought it online. They're still building their facilities, requiring the data on it to see how big does their facilities need to be to handle the well production, et cetera. And so you typically have a certain amount of time, depending on which state, some are more strict than others, as to how long that well can actually be flared for before the gas actually has to go to sales. And so, trying to take advantage of that, you need to be nimble, you need to be able to have an approach to pick up your operations and move it to the next site because these wells are on a hyperbolic decline, so their production rapidly changes and decreases. And then not only that, like I said, nobody wants to drill a well that they can't put their gas to sales. The whole goal is to put your hydrocarbons to sales. And so the reason that gas is being flared, like I said, is that they typically don't have their facilities done yet. And the long-term goal is not to continue flaring. While there are exceptions to that rule, it's just that's not the overwhelming majority of sites.
Yeah, I mean, we typically try and pick off sites where there's some other reason why a pipeline will never take the gas to that site. That's been a good target for us. I think Crusoe, who also mines Bitcoin and oil fields, they target the newer sites that have just been drilled. We're targeting sites that are a little bit further down the decline curve where it's a little more steady, and we could be there for probably 3-4 years per site. We do have a view, though, that all of our hash rate should be mobile. So about 6 months ago, we started mounting them on trailers, and that's for oil and gas fields, other pockets of energy that we can find that is otherwise stranded. And in terms of like a data center versus a container, I personally just really like the idea of solving a problem once inside this container versus like each new data center we'd theoretically set up having to solve it different ways with how the air flows and all that kind of stuff. So having this controlled environment, I think has been really beneficial for us. We've iterated our design probably like 4, 5, 6 times just in the last year, and going from like one container to I think we've got 27 live now in the oil field. And we build them down in Ponchatoula, Louisiana.
Can you talk more about the decline curve when it comes to oil and gas mining?
Yeah, so I mean, what we try and do is just target like, some spot where we're going to be probably still okay about 2 years out. It's tricky. It's more an art than a science, I guess I'd say. So and every well is different. So.
Last thing I'll add on buildings is for us at Mining Store, we've developed a 50 megawatt scalable steel structure that can be put up in 6 months. The longest lead time items are the switchgear right now. I think most switchgear companies are out plus 20 plus weeks. It seems like everyone bought transformers 3 months ago, but everyone forgot to buy switchgears. But that's our plan of scaling and moving forward in the industry. I'm going to go over to you, Frank, regarding going public versus private markets. What's been the experience of a public mining company, the first public mining company, and would you do it again?
Well, it was crazy at the time because it was the first. I was trying to launch an ETF. I have the JETS ETF and did Go Gold, Go AU, and was trying to come up with a Bitcoin and recognize that the regulatory world was not going to let one happen due to the concerns of anti-money laundering laws. So all this research sort of going nowhere, and so well, once you get into crypto mining, in fact, you mine those virgin coins and you can save them so you don't have an AML issue. And so this became the proxy. And then RIDE went public in the US, and then HUD 8 went public, and there's other people follow with that. It was an incredible ride as an investor. We tracked 92% of the time with Bitcoin prices. And it used to be by the day, it's now by the hour. Bitcoin's up in the morning, we're up 7%, Bitcoin rolls over in the afternoon, all of a sudden we're tumbling down with it. And that's happening with all the crypto miners. It's like watching kids play soccer. They all follow the ball. And so I think the capital markets was a wonderful way because we became this sort of proxy. Right now it's bizarre, but private deals are more valuable than public deals. If you take a look at our PE ratio, our cash flow multiple, our revenue multiple, NVIDIA's are much more expensive in that sort of proposition. So I think going public today, there's now over 20 miners, it's becoming more crowded, but I have lots of capital market experience, so it was easy. I know this from the mutual fund and ETF world. If you're first and you're the first to come up with a theme, then you get shelf space. You get quickly. You can scale. You can scale $1 billion in assets in that space. So Hive was fortunate to be first, so was able to scale. Fidelity immediately gave $100 million. Other institutions gave another $100 million right out of the gate. So it's been a great ride, the fact to launch your rocket.
Ryan or Todd, do you have comments on it?
Yeah, I mean, obviously can't speak from the public space, but we would be completely open to companies that want to give us $100 million because we've got no shortage of assets that we could go after. So, my business partner, Justin Bowdy, spends a lot of time on the BD side, the raising capital side for us so that we can execute on a lot of our projects. I spend more of my time on the operations side, so I can't speak to it as much. That would be better conversation for him. But like I said, I think that the grass is probably always greener on the other side where you hear Frank make a statement like that, and I'm sure it's not as easy as he's making it seem. So, but we'd be definitely open to that kind of an opportunity for sure.
I mean, likewise, if anybody out here has $100 million, I do have some.
Yeah. We can go 50-50 on it too. I mean, from my standpoint, we've been just so focused on our product and getting that right. And we are getting to the point where we're ready to scale. But it's been all about the container, the trailer, making sure it works perfectly, so that we can, keep cranking these things out and not having operational issues in the field. So I think it'll be a big year in general for Bitcoin mining and for folks like us. So,
what advice do you guys have to the new energy entrants coming into the space, either oil and gas companies, energy companies, just new Bitcoin investors that are looking to get exposure to mining and maybe running their mining operations for themselves or at home when it comes to the operations?
I mean, I would just say, don't be scared. Like you hear about stuff Frank was talking about with Intel, you've got to have a green footprint, all this stuff. It seems like everybody's worried about upsetting people. And it's just, get some hash rate live, get started, do something, be a first mover. So many of these companies have the money to do it. They have the, the talent to do this as well. It's just go, get off zero.
Yeah, and from our perspective, like I said, our goal is really to educate the oil and gas industry on the potentials that they're sitting on. And I come from an oil and gas operations background, and it's drilling wells, completing wells, bringing them online. What we've done in the offshore space. Like NASA pulls oil and gas guys because there's not a problem that they can't solve. And so I don't want to demean or downplay Bitcoin mining at all, but the biggest thing with oil and gas guys trying to get into it is they're overwhelmed by it, and they don't know how it works. They don't care, don't want to learn how it works. They're afraid of it. It's just something new. It's a very conservative industry. And so, we're just really trying to say, like, look, guys, the things that you do every single day and the problems that you solve and the safety considerations that you have to take into account and just, the engineering of it, it's like Bitcoin mining doesn't hold a candle to what oil and gas does on a day-to-day basis. And this is something that fits so complementary within your portfolio that you absolutely should be adopting it. And so that's something that we're just spending a lot of time trying to educate people on.
Yeah, and like I think there are these companies really are coming around. Like there was a reasonably large oil company exec suite visiting one of our sites like a month and a half ago. So I mean, they're talking about it in the boardroom.
Yep.
They're really starting to look at this stuff for sure.
How do you guys find mining sites at Hive?
Sorry,
How
pardon
do you
me?
find new mining sites, like new mining locations, cheap energy,
So it's a team approach, and we're focused on trying to stay lean. That we're running now about $12 million of revenue per employee. Goldman Sachs is $1 million, so we want to make sure we have that high efficiency ratio, and therefore strategic relationships that we have are very key. And that would be for us in Europe is Barrage. Some of the team members are here. They've built all over the world. They manage their facilities for us in Sweden and Iceland. So it's having those relationships, always looking and hunting for energy. Dave Perel, he's also building out, and he's on our board. So he gives us other insights, and we can go to him. I think your relationships are so important.
Alex, with you guys in ensuring that your customer has a great experience, how do you choose co-location partners? How have you gone through the process? You mentioned you need to put up capital. How do you choose the right person to invest in so the lead times that you get are the actual ones and you can promise those delivery dates to your clients and make them?
So reputation is a big thing for us. We have a few high-level criteria. We stick to the U.S. for now. We're trying to stick to like very safe jurisdictions where we know we can easily enforce any agreements that we have set up. The more exotic we get, the more risks that just introduces, even if it's a cheaper power cost. If something goes wrong, for example, in Venezuela, right? Like, what are we going to do if the miners aren't online? Sue somebody. So, we try to stick to very safe geographies, and then reputation is a big factor for us. So we do reference checks on anybody that we partner with, talk to other customers. Look at historical execution, and then we have a pretty big due diligence checklist that we've operationalized, and because at the end of the day, any co-location partner is basically any problem that they have is basically our fault in the eyes of our customer. Yeah. So we're very, very thorough about and very, very picky about who we work with.
It's definitely important in order to scale and maintain the brand reputation. Todd and Brian, do you guys have clients, retail clients, or are you all self-mining?
Yeah, so we did a deal earlier in 2021 with Fortress Blockchain, which is now Cathedra. And so we have it's not really a hosting deal though, it's more like a partnership deal.
Yeah, we have basically two aspects to our business model. So one, we are a self-miner. We find our own sites, put our own equipment out there. And then the second one is, we have our own construction, like I mentioned, where we build our own containers in Casper, Wyoming. And we, try to work deals with oil and gas guys. Like I said, we're trying to educate them and say, here, you can invest in your own containers as well. We'll help build them for you. We'll bring them out to your sites. And basically it's like a management fee or agreement for us to help them operate it, or at some point turn over the keys to them so they can fully bring it in-house. And so there's kind of two aspects to our business model and how it is. It's self-mining plus, helping oil companies do it themselves too.
I think coming to events like this are really important. I know that Aiden Killick, our president and chief operating officer, I've been getting him further flight from Vancouver to get down to Texas. He's been at several events because Texas is where we're going to double our capacity. And you go to the events like last week, it was just a great experience, 1,500 people and complete different stories and how you hook up gas. And Bitcoin's easy compared to drilling dry wells and blowouts, et cetera. And the sort of entrepreneurial spirit of Texas. So it's seeing that, but you can't see that sitting behind your desk in Canada. You're not going to see it vice versa coming to Miami now. Networking, building relationships, getting industry information. There's another event earlier this year in Austin. No one expected that to be a success, and it was basically a sellout. But for us, for Aiden and myself, it was just great of getting information regarding the great nation of Texas and its vision of becoming the center where they want to say get rid of the petrodollar, which we heard last week, and it's going to become the electric dollar for the global economic scene. So it's coming to these events are so important, I think.
I definitely agree with you. I think that's the last question I want to bring to the board to you guys is mining content. What is your strategy at River Financial and for you guys when it comes to mining content, educating? We've talked a little bit about educating the oil and gas space, but really educating the community that your mining operations are in, what you guys are doing, that there's no harmful emissions, stuff like that, and even getting retail into the industry.
Yeah, so a big part of our content strategy is educating retail. We've had a pretty successful content strategy already, just in Bitcoin in general, or river.com/learn. We have a lot of great content about how Bitcoin itself works, how Bitcoin markets work. So we're continuing to invest in that and bringing that to mining. So expect more there in the near term. And then we have some other stuff in the works.
It was a big shocker last year. We have first out strongest ESG strategy, green only, et cetera, and Elon Musk comes out about carbon and coal, and all the stocks fall down. And we were really frustrated with that. Why wouldn't we separate from the pack? And so we said, we've got to get into this education. And so I joined the Bitcoin Mining Council, and we did things for education. We took Michael Saylor's presentation of 30 minutes, and we distilled it to 3 minutes for the attention span for a lot of investors. And then we put it in French, in Swedish, it's in English, and it's in Spanish. Why? Because in Sweden, we get regulatory bodies or people come out with FUD. So we can turn around and give them, here's 3 minutes in your dialect. In Quebec, it has to be in French, and so we make sure we spread the news so about this industry and how smart it is and how it's functioning. And now it'll be the natural gas, the opportunities of using solar and wind, and where you're on the grid and how you can use natural gas during sort of the volatile energy flows. How do you sort of make them nice and flatline? So it'll be continuously educating.
Yeah, and we spoke to already about the education of what we're trying to do with the oil and gas companies and why this makes sense for them to bring it into their portfolio. Another part along the, at least the content or the education side, I am personally, and other members of our team feel the exact same way, is that we're not beholden to one type of energy source. There's a lot of Bitcoin maximalists in the crowd, and while I definitely identify that, I identify as an energy maximalist prior to that. At the end of the day, all forms of energy bring prosperity to people. And coming from the oil and gas industry, we've faced a lot of the ESG, anti-oil and gas rhetoric numerous years prior to it even being labeled ESG. And so a lot of our education also comes into, if you're going to say this form of energy is bad and point at one, I'm going to tell you why the form that you're saying is also bad. You know what I mean? Energy is nothing but brings human flourishing and prosperity, and it's a big part for us to educate why oil and gas is good, why coal is good, why natural gas is good, why wind is good, why solar is good, why hydro is good. I can point to everything, but like I said, if you're gonna throw rocks at one, I'll throw rocks at all of them. So
I love it. Yeah. Bitcoin mining is energy well spent. Yeah. Simple as that.
100%. Yeah, I mean, before Bitcoin mining, candidly, I really didn't have an appreciation for what happened after I plugged my phone into the wall. I didn't understand what it took to actually get that energy there. And since going down this journey, I've learned quite a bit, and most especially about the oil and gas industry. I think it would be, behoove a lot of folks in this country to get a better understanding of what they actually do up there and down in Texas as well, and give these folks a little more respect. They're doing real hard work, great work for our country. And for us on the education side, it's been really more just like Ryan was saying with the oil and gas companies directly, the guys on the ground. I mean, you'd be surprised how many roustabouts know about Bitcoin and love what they're working on with us there. And then there's always a certain crowd that you're never going to make happy. Like, well, we're mitigating a flare. Yeah, but you're helping them stay in business. It's like, well, sorry, we're solving a problem, so go somewhere else.
Well, thanks again, guys, for jumping on the panel. We appreciate it.
Thank
Thank
you.
you.
Great job.
Such a step.